Hello, I'm James Goulding, editor of Technology Reseller magazine. Today I'm down in Chichester to talk about mergers and acquisitions with Nigel Cook, founder and managing director of Evolution Capital, a leading mid-market corporate finance boutique specialising in the technology, media and telecommunications market. Nigel founded the company in 2003 after a 20-year career working with some of the leading IT companies, including IBM and Wang. Over the last 2 decades, he has worked with more than 200 clients, completing 80 acquisitions worth in excess of £600 million, including company sales, fundraising, and serial acquisitions. So, welcome, Nigel.
Thank you.
You must have had an extraordinary last 18 months.
It's been a very interesting 18 months, James. Corporate finance is a fairly traditional field, and we've all built processes we have ourselves over the last 20 years, which have been based around human interaction, face to face. And for the last 12, getting on 18 months, we've had to do much of our work remotely. And that creates challenges when you've got to share information across, multiple businesses and tens and twenties numbers of people. And also try to create that human element as part of the process for entrepreneurs to make decisions of whether they're going to invest or buy a business.
Yeah, that must be very difficult. And I'm assuming your clients also will have experienced a lot of changes. Has there been any change in reason for their approaching you?
I think that when you have an event like the pandemic, it does bring forward decisions for certain entrepreneurs that are looking to retire, but it also creates opportunities for other entrepreneurs that are looking to grow, because whilst there's been limitations on organic growth because of the pandemic and the restrictions on our business activities, there has been another way forward, which is through mergers and acquisitions and growing your business through enhancing the value through M&A. And more entrepreneurs, I think, are seeing that as a route forward.
Yeah, and there's obviously been a lot of activity on that side in the market we operate in. And are you getting sort of new entrants coming into the market as well?
Very much so. I think that when the pandemic struck, let's use that term, back in March, things went very quiet, and for 3 or 4 months there was very little activity at all. By the time we got to the autumn, most of the tech-based PE firms were back into the marketplace and looking for acquisitions. And by the time we got to sort of Christmas, there was a lot of competition around competing for the best businesses. Since the new year, we've seen investors and PE firms moving funds from other areas which they've invested in, like travel and hospitality, into our space, because it's seen as a safe haven and a good place to put your money.
Yeah. Okay. Well, that's a cover. And you represent both the vendors and the sellers. We do.
We're our rationale is building value, and for some businesses that means looking for a sale in the next 6 months. For others, it's a journey of building value through acquisition, and then realising value at some point in the future.
Yeah. And you're obviously a specialist in the TMT market, so for businesses or entrepreneurs that are looking to sort of get maximum value for their business, it's advisable to use someone with the experience that you have.
I think that if you can find an advisor that has a track record in the particular sector that you operate in, that brings advantages, because they understand the marketplace, they understand the methodologies around valuation, and the good ones will have reputations with the buyers, because they would have done business with them before. And like any other business, M&A is a people business.
I mean, you mentioned earlier some of the challenges you faced with meeting up or not meeting up with people. How have you sort of overcome those difficulties?
We were very quick, like many businesses in our field, to start to try to do things across video, and so initially we rather than run initial meetings and negotiating meetings, on a face-to-face basis, we've had to do that on a remote basis using video technology. The problem that kind of generates is how do you build the emotional relationships that are required for investors to make a decision, a conviction one way or another to buy a business, because like any other commercial transaction, much is done on a relationship basis, and that's difficult with that technology.
Yeah, because you tend to, for someone not in the corporate finance world, you tend to think of it as being a very sort of process-driven transaction, but it's not. There's a human element involved.
Yeah, very much so, and to a certain extent, 20 years ago, the data room was a physical room where you went to and laid out all of the paperwork for commercial investigation, and you got a ticket when you went in, and you were searched when you went out, and it was run on that basis. Well, nowadays the data room is an electronic room, and you're monitored going in and out, and you have individual permissions to download and copy things and to maintain confidentiality. So the challenge for us has been how do we manage human interaction and the sharing of confidential information in a world that's becoming largely remote in the front end. And so that's, I think, been the difficulty for most advisors.
Yeah, and a lot of companies obviously have undergone some sort of digital transformation. You've been developing new software as well, I understand.
Yes, I think that the future is pretty certain, in that technology from now on will start to play a much bigger part in terms of supplementing face-to-face interaction. So we've been building a software platform which handles and manages the sharing of information.
For buyers, obviously, you mentioned sort of need for personal interactions and relationships. Do people come to you with a clear idea of what they want to gain from the transaction, or do you provide a very advisory role?
So I think that's varied, depending on the experience of the client. So most clients haven't trodden the path of selling their business. It's a once in a lifetime affair, and they're looking for high levels of advice to guide them through that process. Other management teams have been through it a number of times, and particularly teams that are looking to acquire, they're looking for help with opportunities and with benchmarking those opportunities against other businesses, whereas an owner will need help right through the process.
Do you see the changes that have occurred in the last 15 months? Do you see them sort of persisting? Has your market been changed completely?
Yeah, so if we went back 18 months, it's very difficult to necessarily have for a professional lawyer or chartered accountant that weren't particularly happy about having a camera in their house and being seen in a t-shirt. That wasn't generally acceptable for many of those professions. Whereas now that change has been made, and people are quite comfortable coming to to a meeting in a t-shirt, and if there's a child running around the back screaming, or a dog that comes and licks the camera halfway through, it's now all accepted. Yeah. So it is, we've had to change our behaviour in the way we work, and that's rolled on to changing our attitude. And I think what we can, we all understand now is is it's changed forever, and we're not going back to the way we used to work. People now, I think, enjoy that we're working remotely. They like working from home, and also the process can be more efficient, and it can be run faster through the new processes, backed with technology.
Yeah. And presumably, with so many buyers moving into the market, you will be approaching, or businesses will be approached that may not have considered selling before. Should businesses, just as a matter of sort of preparation, be working to increase the value of the business with an idea for a sale that might come or might not?
I think that business owners need to be match fit for a sale at any point in time. Certainly, that there's high activity in terms of firms that are growing by acquisition approaching business owners and asking for information. And if you haven't really prepared your data, it's difficult to put your best foot forward. And first impressions are obviously last impressions. So I do believe that the owners need to have a good understanding of where the value is in their businesses, and be able to respond in a structured way, rather than an on demand from a buyer.
So do some of your clients come to you for that purpose, just to get a match fit?
So I think that most of the approaches, an owner has some idea in mind of what their expectations are in a sale. They may not know of all of the objectives and routes to achieving that, and I think that comes out in a business review. At the end of that review, you can really define the objectives, and they might be different for a business which has got one majority owner that founded it, and it's a family business, through to one where there's half a dozen different owners, all at different ages, and potentially having different expectations of what they want to achieve in a sale. Some may want to stay with the business. Others might want to depart, exit and retire. And so building a proposition that's right for that set of shareholders is the challenge for the advisor.
Yeah. What are some of the mistakes that entrepreneurs make when considering the sale of their business?
I think it's really in the preparation phase, in that there has to be a platform of data created which carries you all the way through the process. And I think that the mistakes are coming up with a short form, and then agreeing a price with a buyer, and then once you've signed a set of head of terms, the investigation starts to take place, and you can't support some of the statements you've made or the performance that you've outlined, and that then leads to an erosion of the price that was agreed. So I think the biggest mistake is not preparing for due diligence and the depth and breadth of the investigation that takes place, and particularly now, the private equity firms are very specifically looking at sustainability in a business. How important is the last 2 years when the future is going to be quite different?
Yeah. Is that something that's changed in the last year?
Very much so. That very few businesses have performed in the same as they had done over the couple of years leading up to the pandemic, as they had through that year. Some performed much better, and those ones which were providing remote services is quite typical. Others that were supplying hardware and project installations struggle to actually fulfil those orders.
Yeah. That must make your job more difficult, because all the sort of metrics you would have used before might not apply.
The metrics still apply, and what's interesting, James, is that whilst the businesses that in our space that hadn't performed as well as they had done the year before, it was largely the one-off projects that were held up, or the sale of hardware or software, and that's generally the smallest part of the value in a business. It's the customer contracts, the recurring revenues, which create the value, and that pretty much continued throughout the pandemic.
And are there particular things about the TMT sector that attract these private equity clients?
Private equity clients, investors clearly like the business model. The TMT space has changed dramatically over the last 20 years. In that, if you look back, 20 years ago, 30 to 40% perhaps of the revenue would be recurring revenue, because the business, regardless of whether it was telecoms, hardware and software IT, would be about selling systems that were hung on the wall and wiring up the office and then maintaining that network. Whereas today, the services are cloud-based, and the revenues are generated through connectivity to the cloud, or the software that you're accessing, or the storage that you're using. So it's quite typical for fast-growing, high-value IT businesses to have a recurring revenues of 80-90%.
Yeah. Does that make it easier to sort of undertake a sort of buy and build strategy?
Buy and build strategies are put in place to grow value, and most buyers have a strategic plan of which areas of the business that they wish to grow and focus on. When we look at the telecoms and IT space, it's a liquid moving vehicle in terms of it's a whole number of revenue streams. Some of those streams are growing, and some of them are deteriorating. And buy and build strategists and buyers are focusing on the growing areas of our industry, and trying to build on that to make up for what they're losing off the back end, for the technologies that are diminishing.
Yeah. So what's next for Evolution Capital?
I think for us the future is reasonably clear. We will continue to offer premium services to the mid-market. We have new methodologies and processes which we've developed over the last 12 months, and we see that technology will help us supplement some of the face-to-face activity that's been the stable ground of our process over the last 20 years, with interaction through the cloud and through the software we're developing.
Well, thank you, Nigel, for your comments. It's very interesting, and I think what we can take from that is preparation is essential, and also working with someone who is an expert in your market. So thank you, Nigel, and we look forward to more conversations with you in the future.
Thank you, James. I've very much enjoyed our conversation, and thank you for coming down to see us, and I look forward to seeing you again soon.